Ladies and gentlemen, esteemed members of the press and fellow economists, members of the Council, Mr. Kim, it is a pleasure for me to see you. I would like to greet you all and allow me to use this opportunity to thank you for the attention you are giving to the inflation report and our assessments of current economic developments and their prospects for the coming period. Let us first go back to what we had announced a year ago and what happened in the meantime. For the sake of reminder, a year ago, the National Bank of Serbia said that inflation would return within the target tolerance band in the second half of 2013, and that the economic recovery would be accompanied by a decrease in external imbalance. In contrast, some analysts at the time were anticipating two-digit inflation by the end of 2013, as well as significant weakening of the dinar, excessive spending of foreign exchange reserves, and continuing recession. Actual economic developments have clearly proved them wrong. But first things first. Measuring 4.9% year-on-year in September, inflation has returned within the target tolerance band of 4 plus minus 1.5%. This shows that the National Bank of Serbia, the team sitting before you, and people sitting here as audience, but actually working for the National Bank of Serbia, have not only been right in their assessment of the nature of inflationary pressures, but that they also weighed policy action carefully and ultimately took measures that helped maintain price and financial stability without any detriment to the nascent economic recovery. Inflation declined further in October. It now measures 2.2% and is temporarily below the lower bound of the target tolerance band. Given that inflation is already low, future monetary policy measures will be aimed at keeping it within the target. Consistency in monetary policy implementation and the results achieved so far have been acknowledged by others, by the financial sector, businesses, and households. This is illustrated by the fact that their 1 year ahead inflation expectations have fallen considerably and trended closer to the target. We expect that our perseverance in maintaining low inflation will anchor inflation expectations to the target, which has been set until the end of 2016 at 4%. Thanks to significantly improved foreign trade trends, the current account deficit has been more than halved relative to the previous year. This means that the external imbalance is decreasing even faster than expected. It was owing to positive trends in external economic relations that the dinar has remained stable, despite changeable conditions in the international financial market and the perception of sustainability of domestic public finance. The National Bank of Serbia intervened in the interbank foreign exchange market in order to prevent both excessive daily strengthening and excessive daily weakening of the dinar. Economic growth, set in train in late 2012, continued this year. However, the recovery of our economy and almost all other economies is weaker than expected. It was only this summer Nearly 5 years after the collapse of Lehman Brothers and the start of the global economic crisis of enormous magnitude, that developed countries showed signs of a possibly sustainable economic recovery. This is encouraging, but it also means that the time is drawing near when central banks of developed countries will start exiting the quantitative easing program, confronting Serbia and other emerging market economies with new economic challenges. Still, I believe we can overcome these challenges, and through coordination of monetary and fiscal policies, ensure higher economic growth rates and lower unemployment. Higher productivity will trigger a rise in real incomes and purchasing power, leading to the recovery of domestic demand, i.e., real improvement of living conditions of our citizens. This is the result that we are striving for. At the same time, remaining committed to price and financial stability, we support the government in the pursuit of its economic policy. Let me also comment on the results achieved during the recent Savings Week. I was very pleased to see that banks were complying with the National Bank of Serbia's recommendation on the level of interest rates. Also, the practice of attracting savings deposits with high interest rates was almost fully abandoned. We are also satisfied with the fact that over the past year, our citizens have been increasingly turning to saving in dinars and recognizing its greater profitability compared to saving in foreign exchange. Finally, my hope and expectation is that low and stable inflation, as well as stable exchange rate, will make it possible for all of us to direct our attention to saving and to the efficiency of investments, which are of paramount importance for the sustainability of economic growth in future. Before I give floor to Mr. Branko Hinic, I would like to thank again to all stakeholders, starting from the support we received from the Council of the Governor. I would like to thank all employees of the National Bank of Serbia, primarily those in charge of producing the inflation report, and to all of you who helped us get acquainted better, to help us present to the citizens the way in which the National Bank of Serbia is fighting inflation and is trying to maintain price and financial stability. Mr. Hinic, the floor is yours.
Thank you. Ladies and gentlemen, since we last met at a presentation of the August report, inflationary pressures have receded further and economic recovery has moved along. As announced repeatedly by the National Bank of Serbia over the last year and a half, year-on-year inflation has returned within the target tolerance band in September, even though it undershot the target in October when it fell to 2.2%. Year-on-year inflation is expected to move within the target tolerance band in the coming period. The new inflation projection is lower than the one released in August, mainly owing to the very good agricultural season, whose effects reflected on food prices more than anticipated earlier. While the projection of GDP growth in 2013 remains unchanged at around 2%, the projection for 2014 has been revised down to around 1.5%, on account of the dampening effects that fiscal consolidation measures are likely to produce on consumption in the near term. These measures, however, must be implemented in order to ensure public finance sustainability and macroeconomic stability, which are the key prerequisites for viable economic growth. The reduction in external imbalance has proceeded at an even faster pace than expected earlier. As a result, the current account deficit of the balance of payments is projected to contract to around 4 to 5% of GDP this year. The global economic environment remained in the third quarter under the dominant sway of developments in the United States. That is, anticipation of the Fed's decision on the monetary stimulus tapering and the budget and debt ceiling crisis. Uncertainty in the international financial markets persisted until the Fed's September meeting, which postponed the decision on the start of reduction in the quantitative easing program. Coupled with positive foreign trade trends, this led to the weakening of depreciation pressures in the domestic market from mid-September onwards and paved the way for appreciation pressures in October. An additional impetus to appreciation pressures came from the announcement of fiscal consolidation measures, which encouraged non-residents to invest into government securities. In October and November, the National Bank of Serbia intervened in the interbank foreign exchange market on the side of purchase. In the year to date, the National Bank of Serbia sold 425 million euros in the interbank foreign exchange market and bought 365 million euros. By intervening in both directions, the National Bank of Serbia has once again confirmed its commitment to preventing major short-term fluctuations without targeting any specific level of the exchange rate. Market concerns and reactions to the Fed's monetary policy reflected on risk premium movements across the region. Serbia's risk premium, measured by ENBI, followed the regional pattern, with somewhat more pronounced changes in both directions compared to other countries. In mid-November, Serbia's ENBI stood at 438 basis points. Though the euro area emerged from recession in the second quarter, it is still too early to speak of a major recovery, as the pace of growth remains uneven. Encouraging, though, is a much better outlook for the euro area economy. Its fall in 2013 is likely to be smaller, and its growth in 2014 stronger than expected before. The recovery of economic activity should also be aided by the lowering of the ECB's rate to the historical low of 0.25% in November. Domestic economy grew 1.1% seasonally adjusted in the third quarter, led by a boost in industrial and agricultural production, as well as by net exports on the expenditure side. These factors will also determine the annual movements of GDP, which is estimated to go up by around 2%. We expect that the incipient euro area recovery and the beginning of Serbia's negotiations on EU membership will boost investment in 2014 and encourage a rise in net exports. Nevertheless, due to fiscal consolidation measures, the contribution of government and household consumption to growth will remain negative. Hence, GDP growth in 2014 has been projected at around 1.5%. The current account deficit in the 3 months to September stood at only 1.4% of estimated GDP. It decreased owing to continued expansion in the automobile industry in particular, the effects of substitution of petroleum products imports, high inflow from remittances, and fiscal consolidation measures. For the first time, quarterly exports reached 3 billion euros. Relative to the same period last year, exports in the third quarter rose by 38.2% and imports by 10.5%. The annual current account deficit is expected to be 4 to 5% of GDP, which is below expectations stated in the August inflation report. Inflationary pressures have continued to ease. In the year to October, inflation reached 2.6%, of which 2.1 percentage points are attributable to growth in administered prices, while food prices recorded a decline. In line with expectations which the National Bank of Serbia has communicated over the past year and a half, year-on-year inflation returned within the target tolerance band in September. In addition to monetary policy measures, the push was also generated by a fall in primary agricultural products, low aggregate demand, and relative stability of the dinar exchange rate. By October, core inflation also returned within the target tolerance band. Consumer prices, excluding food, energy, alcohol, beverages, and cigarettes, are included in core inflation. Last year's high base and the fall in food prices resulted in year-on-year inflation undershooting the target in October and reaching 2.2%. Inflation is expected to rise gradually towards the target over the next 2 months and to fall within the target tolerance band by the end of the year, though still short of 4%. To recall, the National Bank of Serbia's objective is to have inflation at plus minus 1.5% by the end of 2016. A decline in year-on-year inflation was accompanied by subsiding inflation expectations of all sectors. Expectations of the financial sector have been within the target tolerance band since October. Falling inflation and inflation expectations have made dinar interest rates more attractive and boosted dinar savings. In October and the first half of November, dinar savings rose by 5.7 billion dinars. Since early 2013, they have grown by 11.4 billion dinars. According to our projection, inflation will move within the target tolerance band next year. The main disinflationary factors in the coming period will be very low costs in food production and low aggregate demand. The disinflationary effect of domestic demand will be further amplified by the government's economic measures, which will reflect on lower government and household consumption next year. On the other hand, the one-off direct effect of the VAT increase on inflation is estimated at 0.5 percentage points. The indirect effect will be small and limited by the producer's opportunity to raise prices against the background of low domestic demand. Risks to the inflation projection are associated chiefly with developments in the international environment and access to external finance against expected monetary policy easing of central banks of developed countries. Implementation of credible fiscal consolidation measures may ease possible negative effects in this regard. Having analyzed current and expected macroeconomic developments, the National Bank of Serbia's Executive Board decided at its last meeting to cut the key policy rate by 0.5 percentage points down to 10%. Given the subsiding of inflationary pressures and assuming fiscal consolidation is implemented as planned, the National Bank of Serbia's Executive Board will consider further monetary policy easing in the coming period. However, as unexpected changes in the impact of some factors on the inflation projection remain possible, the expectation with regard to the character of monetary policy in the coming period is in no way binding on the National Bank of Serbia. In view of the risks we are facing, A durable reduction in external imbalance is an imperative and requires improvement in the fiscal position. The National Bank of Serbia therefore supports the government's commitment to consistent implementation of consolidation measures, which will ensure macroeconomic stability and open up additional scope for further monetary policy easing. Thank you. A journalist from RTS. When you made the projection for the next year, did you take into account two risks? The Minister of Finance pointed to one risk, so next year we could borrow at a higher rate than this year in order to cover our public debt, in order to cover the minus in our budget. And the second risk is of a political nature concerning the possibility of new elections. To what extent this could jeopardize macroeconomic and financial stability? And the second question is whether you will reduce further the key policy rate. I will be short, and my colleague Hinic can be more elaborate, as well as Mr. Veselin Pješčić. As regards all possible risks, yes, we have taken into account all possible risks, and we have analyzed them in a thorough way, and we have exercised at least two scenarios for these possibilities which you mentioned. First of all, elections imply no change in the policy of the Central Bank of Serbia, and I'm sure that no government after the previous one will not take the risk of abusing its own fiscal consolidation, or it will not impose any challenges on monetary policy to which the National Bank of Serbia in this team would resist. And this may be the risk of a historical behavior, meaning that when we have elections, life in Serbia is halted and nobody speaks of the economy anymore. Everybody talks about some predictions and so on. I'm sure that the time is gone for such fertile talks, and if we do have elections, we will have to do our job. As for borrowing risks, Veselin can say a few words about this, and I also mentioned this in my introductory speech. We have the risk of a further reduction in the quantitative easing program, and we also may have the risk of the non-implementation of promises of the government in terms of savings. As for percentages and possible projections and so on, Veselin can say something more about this. In regard to the developments in the international market, Serbia is a small and open economy, and it is under a great impact of these trends, and Serbia is not an isolated island. It is certain that Fed will reduce its quantitative easing program, and this will lower the return on securities, and this will be a risk which we have assumed in our projection, and this will not jeopardize the implementation of our objectives.
In his introductory speech, Mr. Hinic said that what the National Bank of Serbia is doing is that in its decision-making on the level of the key policy rate, it takes into account all the risks that are ahead of us, and they're both exogenous and endogenous. If you take a look at inflation outlook, we could say that there is scope for further monetary policy easing, but the concrete decision will depend on how everything with regard to inflation evolves in the coming period. If I may only add to this answer, Considering that interest rates in the reference benchmark financial institutions are close to zero or at zero, the attractiveness of investing in Serbia, of investing into dinar government securities, has made the National Bank of Serbia buy 160 million euros in the foreign exchange market. This means that as long as the situation in the external environment is the way it is, we will not have any problems in deficit financing as the National Bank of Serbia. And especially while the international financial institutions are supporting the process of dinarization and while foreign investors demand dinars. What we are worried about most is the manner in which the deficit is financed. If the deficit grows as a result of borrowing, of taking loans, which had a grace period of 3, 4 to 5 years, and where interest payments are falling due and they have to be repaid in foreign currency, but their principals are also falling due, and the utilization and the effectiveness of these loans that have been disbursed, I really wouldn't like to talk about. We heard that dinar savings increased, especially during the savings week. Maybe you could give us precise data as to what happened with foreign exchange savings and to what extent foreign exchange savings increased. During November, there has been an increase in dinar savings, but what's typical for this November is a slower growth in foreign exchange savings from the 31st of October to the 17th of November. FX savings increased by 9 million euros, by contrast to dinar savings, which increased in the same period by a much higher amount. This is something that marked this year's month of savings. Your question about foreign exchange savings, well, I can tell you that compared to the lower retail trade volumes and low aggregate demand, which is evident because we can all see it, we're very happy to see that savings are nonetheless rising, regardless of whether we are talking about the accrual of due interest on all savings or whether we are talking about new savings. What I don't like and what the Executive Board doesn't like is looking at a crystal ball and trying to predict how many billions of dinars are still in mattress money and making calculations based on mattress money, on the amount of mattress money which could be attracted and channeled into official channels. These sensationalist headlines that we're talking about, several billions of euros in mattress money, do not support anybody, and they're a continuation of the story. Give us more money and we will know where to invest it. We at the National Bank of Serbia are well aware of the fact that banks do not have any problems with liquidity and the sources of funding, but rather with whom to extend those loans, because nobody wants to assume risks, nobody wants to take risk, everybody wants a safe investment which pays off quickly and bears no risk. So the problem in Serbia is not whether there are sources of liquidity, whether there are savings compared to countries in the region. The Serbian banking system has much more sources of funding, own sources of funding, than countries in the EU. But what we do have as a problem is the problem of the culture of borrowing, where the roles are divided. You can start from the socialist banking system. The roles are divided between shareholders, who are at the same time members of the managing bodies, and loan beneficiaries. So this is something that all of us will have to work on very much. So let there be no fooling. We cannot fool ourselves that the savings that exist in mattress money have to be channeled to banks, because these savings are subject to interest costs. And on the other hand, the percentage of non-performing loans is not insignificant. It does not rise as significantly relative to other countries. Our banks are highly capitalized, but the problems they face is where to invest those funds.
In your inflation report, you say that interest rates on dinar and euro loans to corporate and household sectors went up, whereas loans on deposits, whereas rates on deposits have gone down. What is the reason behind an increase in bank margins? We can say that there has been a change in the structure of lending. We have a greater volume of consumer loans and loans at higher interest rates, and when we calculate the general rate on total lending, this rate is higher. Broken down by individual categories, we can say that rates are lower than 1 year ago. I would like to add something. This is what we don't like. We have less loans to the corporate sector, and we have less lending to capital creation projects, and we have the continuation of the trend of lending to the household sector, and we have an increase in consumer loans, which means that we don't have a rise in healthy demand. That is, we only have in place for making ends meet, so current account overdrafts are being covered and so on. Let us not mix between the structure of costs by mixing up between interests and margins. I will use this opportunity to say that I'd like to send a message to the whole banking sector and individual banks as well. You know that we make a lot of effort, and we also have a campaign that security should come before profit, so banks should lower interest rates when they collect savings, and as a consequence we expect lower interest rates and so on. Of course, banks have some additional costs and they wish to increase or to maintain their revenue, but there is also another interesting practice in implementation of NBS's recommendations concerning the resolution of the issue of Swiss franc denominated loans, and when it comes to the repayment of loans before the adoption of the law on the protection of financial services consumers, there are some banks which defined in their own way the implementation of our recommendation. So they did it in a creative way. In conditions of full implementation of a recommendation, a commercial bank would incur particular costs. So the creativity means that the NBS's recommendations are not implemented to a full extent. They're implemented only to the extent in which a bank will not incur any costs. And if a bank has no costs, this means that citizens will not have some facilities which the NBS recommended. And these are some euphemisms of interpreting our recommendations in different ways. And this can stay only in the past because the central bank, as a regulator, will use its right and I will use my right as well, to read all minutes from boards of directors of commercial banks, and we want to see in what ways some commercial banks wish to apply recommendations concerning Swiss franc loans, because some banks charge interest rates in different ways under the category of undefined, and this was illegal, so to say, because the legal effect was implemented only after the adoption of the law on the protection of financial services consumers. And I have to say that we are fully committed to working to improving this field, and we are of course analyzing the practice of all banks, and we will weigh up the pros and cons, and we are not this is not a shot in the dark, and we are really serious in this, and we are also cautious and prudent in implementing our measures to the benefit of all our stakeholders.
I would like to know, when do you effect the first effects of the decision that international financial institutions can also extend dinars in credits in dinars, and will this lead to a decline in interest rates on loans? We expect the first effects of this decision over the coming months. We expect that international financial institutions, the EBRD and the IFC, will start extending dinar loans. What's the most important thing here, and the most important effect of this measure, is that the use of the dinar in our financial system will increase, and this will contribute to the financial stability of the system as a whole. We expect that the disbursement of these loans will start very soon. Yes, and this will be a competition to commercial banks. In addition to increased use of the dinar in the financial system, another benefit for the National Bank of Serbia is the increased efficiency of monetary policy, because in those conditions our key policy rate will have a much stronger impact on the dinarized segment of our economy. And this is what we are striving for. We want to increase financial stability and increase the efficiency of monetary policy transmission mechanism.
Gordana Filipovic from Bloomberg. When you talked about the deficit that you are worried about, you were referring to the fiscal deficit. Is that right, concerning loans taken in the earlier period? We are worried about the share of servicing of external debt in the deficit of the government. That is the share of servicing of inherited debts towards international financial organizations, numerous international financial organizations, and this is the segment of the budget which has around 40 to 50 pages. And there are different various loans of which we have no great use in the economy, but there is an obligation in the budget, and this obligation has to be settled, and we need to qualify ourselves as serious partners to these international financial organizations, and they're helping the National Bank of Serbia to have a monetary policy which will be able to impact not on 1/3 of dinar financial flows, but for the government this is a heavy burden, so to say, that it needs to carry on its path to fiscal consolidation. Another question, as for EBRD, I've do they issue these dinar bonds when you purchased these 100 million euros and the amounts that you're continuously buying? So what are the inflows that you're protecting ourselves from? Why this is not invested, why this does not go to the market? Because now we have excessive daily volatility of the dinar, and it is only 0.1 to 0.2%. This volatility is not stronger as in the past period when it was around 0.5.
I will answer the question, when will IFIs issue dinar bonds? First, the idea of the whole concept is that the proceeds from which dinar bonds would be, from which dinar loans would be extended, are the proceeds of the primary sale of dinar securities in the domestic market, and this is a novelty. These securities would have a credit rating of AAA, and the eligible buyers would be domestic legal entities and banks, and also non-residents. And this is what would contribute to increased use of the dinar, both through the issue of dinar securities and through the issue of dinar loans. When it comes to the second question, the intervention of the National Bank of Serbia in the foreign exchange market, you are right in saying that the volatility of the exchange rate is relatively small, but could you imagine where the dinar would be if we allowed these 100 million to get into the market? And inflows into the foreign exchange market stem from increased non-resident interest in government securities. This is what generated an inflow since October, when the Ministry of Finance announced fiscal consolidation measures. Let us remind ourselves, in August and September, we had no such inflows. Inflow was smaller, maybe it was even an outflow, and this generated depreciation pressures. So at the time we intervened on the side of sale, and now we are intervening on the side of purchase. We have sold 425 million and bought 375 million. The net effect is 50 million euros. We don't want to see excessive daily volatility of the exchange rate, which only causes uncertainty. What we are trying to do is to deliver relative stability. Of course, we are not targeting any specific level of the exchange rate. We are letting the market determine the exchange rate. I have to get involved. Veselin will confirm this, definitely. But the main criterion for our interventions in the interbank foreign exchange market is the following thing. To all shocks that are of temporary character, we respond by buying or selling foreign exchange holdings. If we were talking about events of more durable character, which we are able to recognize, the National Bank of Serbia would not respond to such events, and it would not have the strength to fight these events. But here we are talking about temporary shocks and about temporary interventions, just as we were talking about temporary exits in from the secondary market when we sold 425 million at end May, and from end May until the 12th of June, where Delphi and the Fed confirmed that when they hinted that they would reduce their quantitative easing, and then the IMF released an assessment of our public finance. So temporary shocks are moderated just as in any other inflation-targeting country, and pursuing a floating exchange rate regime. And as long as these shocks are temporary, we will respond in this way. We are not aiming for profit, nor at keeping the foreign exchange reserves at the same level. Our primary objective is to avoid excessive volatility and precluding any possibility of profit-making on this volatility and precluding the possibility of losing money by the government and by the National Bank.